What's capital? Uh, I'm not talking about capital of a country. I'm talking about financial capital. Well, capital is wealth. It's what you own, your money, your house, your car, or even your cool video games. For people, businesses, and also governments, capital means all the resources and assets they have. In this lecture, we're going to dive into details of capital. Let's get to it.
All right. We mentioned that capital is whatever you own. These assets that you own can be both real, like a house, car. Real things are tangible things. You can see them and touch them. The capital can also be representational, such as money, stocks, bonds. These are intangible capital. The capital of individuals like me and you, and then corporations, and then capital of government, these get together to make the capital of a country, like our country, Canada. The only source of capital is savings. I mean, capital exists in a country because some groups save money in different ways. What are those groups? Like I mentioned, individuals like me and you, corporations, government, and foreign investors and foreign residents. But there is a point here. Non financial corporations, such as manufacturing companies, technology companies, construction companies, are not important providers of funds and savings to the society. But why? Because they keep their savings and money to expand their operation, to add a line to their production, or to hire new people. So they keep it and don't share it with the society. Just like humans, capital also have its own characteristic. Capitals are sensitive, mobile, and scarce. But what do we mean when we say capital is scarce? In simple words, capital is limited. Government and people can't just go and print unlimited money. Why? Because it'll cause inflation. Everybody will have lots of money, then a demand for items will be high and prices for that item will go up. We said capital is mobile. What does that mean? If you were a female, would you stay with a man without stable job and income? You may give a chance and stay for a while, but won't tolerate forever and will leave. Just like capital. Capital loves the countries with stable political environment, with a stable financial policies and economic trends. Capital loves it. If a country has unstable political and financial environment, it'll leave that country. When I say it'll leave, I mean individuals and corporations will move their money from that country to more stable area and country. Capital is sensitive. What does that mean? When we say capital is sensitive, we mean that capital is affected by the government policies, different monetary policies. So if interest rate goes up, less people will get loan from banks to buy car and house and stuff, and companies will sell less. So the contribution of individuals and corporations, which both are source of capital and savings, will be a lot less in the financial market. So capital is very, very sensitive to the decisions that government make, monetary policies and fiscal policies. There is a term called investment capital. What's investment capital? The portion of capital designated for investment activities and purposes is called investment capital. This investment can be direct investment, such as buying a house, car, business, machinery, or paying for startup costs, or investing in a new highway by the government. These are all direct investments. Also, there are indirect investments, such as buying stocks, mutual funds, bonds, or depositing your money in the savings account. These are all indirect investments. Good job. Keep up the great work. Remember, we will get this done together. I'll see you in the next lecture.